Good morning, everyone, and welcome to the European crossover webinar. And taking a look at where we stand with FX. The euro dollar's just a bit lower here. Well, actually, I wouldn't say necessarily lower. It's actually, I'm looking at it here on a daily chart. Just a little bit higher than we were at Fridays at 21.44. And then take a look at the cable. We've made a move up here to 33.96. Bear with me. And we'll just move to that screen. So as I mentioned, we've got the euro here at 21.44 with cable at 33.97. So just a hair bit stronger. And let's kind of take a look at the Aussie Dollar. That took a bit of a jump here. Now, I didn't take out necessarily the highs that we saw, or if it did, it took it out by maybe a pip or 2 pips. But I did see in Asia where the RBA purchased bonds, and that opened the door for them to move a little bit higher. Let's see here. RBA to buy $2 billion in a bond purchase program. So that really, I guess, got things going. And let's see, German economy mystery. Q4 economic growth likely severely impacted by lockdown measures. Let's see here, any other notable lines? Barnier was guarded on prospects for a trade deal with the UK. Barnier sees a narrow path to a Brexit trade agreement. UK envoys and UK EU still split on state aid, and EU's Barnier tells US envoys UK is backtracking on fisheries. So that's where we're at. Bear with me. And we'll take a look at the economic data. So earlier we had German wholesale prices coming up 1/10. And I don't know why this is here. Who is that? Slovakia. I'm not sure where that was coming. And at the top of this next hour, Eurozone industrial production will come up, and no data here in the U.S. Wow, no data today. Interesting. So let's go and take a look where we stand here on the indices. Now we have gone and rolled over to the March contract. Doesn't seem to have made that much of a difference as far as levels and things like that. I'm just going to extend this a little bit. And you can take a look here on the SPOOs here at 38.73. They had actually gapped and on the open and actually holding the gap here. Same to be said here with the NAS also. I really don't expect very much action to take place until we get into the U.S. session. And speaking of, um, we do have a U.S. Electoral College which votes today. Um, Obviously, Brexit. They're talking about it's in reference to this week. We also have the Fed and Bank of England policy meeting, and then data. They're referencing UK and US retail sales as well as German IFO. Let's go on and take a look at the stories. Seems to be a fairly quiet opening to the week. Australian New Zealand dollars tread water ahead of the Fed meeting. The Australian New Zealand dollars held little change against the greenback on Monday as higher commodity prices and positive sentiment in their home markets were offset by uncertainty about the U.S. fiscal and monetary stimulus. The Australian dollar liquid proxy for risk was 1 basis point higher at 75.34, hover around its level of the past three trading sessions after rallying 36% from its 55-cent March lows. The New Zealand dollar was slightly higher at 70.89 and up from its 70.85 close on Friday. Traders are waiting to see if the U.S. Federal Reserve will this week refine its forward guidance on policy at its meeting on December 15th and 16th. Wow, it's hard to believe we're already there. Rather than buying more bonds, analysts said. The market's also watching for a deal on fiscal stimulus by the U.S. lawmakers following months of guidance of negotiations on a new coronavirus aid bill. We expect the AUD to continue to move higher, particularly against the dollar, where our negative house view on the latter comes into play, said Nomura rate strategist Andrew Ticehurst. Rising iron ore prices, Australia's success in containing the novel coronavirus, global optimism with the advent of successful vaccine, and positive surprises around Australia's economic recovery have boosted the country's currency rally. Bullish bets on the Aussie have risen in recent days, with Nomura expecting the commodity-linked currency to rise to 78 cents by the end of 2021, higher than its previous 75 target. Westpac said it's at 80 cents by the end of next year. Market participants do not appear to be waiting for the new year to deploy risk capital. For the near term, at least, the path of least resistance appears higher, said Nomura's Ticehurst. In New England, economists are predicting Thursday's quarterly data will show a large economic rebound for the country's gross domestic product. So that may keep the bid under the Kiwi, at least for now. And then pound buoyant as Brexit talks extend Reuters. Extend and Reuters news. Sterling kept the overnight gains against the dollar and the euro on Monday as talks for a pro-Brexit trade deal between Britain and the European Union were set to continue after the two sides decided to extend discussions beyond the previous day's deadline. British Prime Minister Boris Johnson and the President of the EU's Executive Commission, Ursula von der Leyen, have given negotiations a Sunday deadline to find a way to resolve an impasse of arrangements that would guarantee Britain's zero tariff and zero quota access to the EU's single market. On Sunday, they mandated negotiations to continue talks. Business Secretary Alex Sharma told Sky News on Monday that while Britain and the EU are still apart in the talks, Johnson did not want to walk away yet. In early deals in London, the pound traded 1% higher at 33.59, having hit a high of 33.84. And we know that 33.82 is such a key level. We know that on the daily. Against the euro, it was 0.8 higher at 90.89 pence. It comes as no surprise that the EU and the UK allowed another self-imposed deadline to pass, although there's little sign that the stage that the main sticking points are any closer to be resolved. We expected progress to be made as the only real headline December 31st approaches, said Mark Hafel, Chief Officer at UBS. In our view, a deal is more likely than not, but with each day that passes, the risk of a deal outcome grows. The no deal outcome grows. UBS added that the announcement of an agreement could push sterling to 135, while increasing uncertainty about a no deal could lead to a revisit of the September lows around 128. CFT positioning shows speculators flip to the net long position. See right here on the pound in the week of up to last Tuesday. The odds of Britain agreeing on a trade deal with the European Union before the end of the transition period have risen to 57% on Monday, up from 40% last week, according to the punters betting on the what they call the Smarkets exchange. Chances of a no deal had risen to as much as 61% on Friday and 19% in late November after leaders failed to break impasse of talks. With less than 3 weeks to go with the end of the Brexit transition phase, significant sticking points remain in the EU-UK negotiations, Goldman Sachs said in a research. Our base case research remains that the free trade agreement will be reached before the end of the year, and yes, would ensure the continued free trade in goods, but entail barriers for a trade in service. With that, we're going to move into the analysis. Amir says to take a look at platinum, so we'll take a look at platinum, Amir. Let's jump onto that right now. This makes it easier too because I got one free-flowing chart here. Let's see. Boy, we had a good strong week last week. Look at this. Boy, that really took off like gangbusters. And then we gave a decent chunk of it back here. And I don't know if we were looking at the daily. So let's take a look here. So we've managed to hold so far. This, if we broke this level right here, which would be 990, essentially, right here, that will flip us back definitely on the bearish side. On the short-term basis, it's going to be right there where they need to hold. And we'll go and highlight that. One moment. Right there. And you can see how important the bodies are. I always emphasize that all the time. And where I put my support and resistance, raise it up just a bit. And that's the reason why. You can see how the market's held that. You can see here is we broke open here. We broke above, turned bullish. But look where they came right back, right to the body right there. And then look, we rally all the way up to 1093 and we fall back. And where do you find support? After it falls from 1093, and look how far it sheds down here as we fall apart. And once again, we hold the body. Not only was it support, but it was key to maintain the close above it, which it did. We dip, close down here, we hold it overall, and we're still holding. So on the short-term basis, bulls need to go in and defend that 1006 on a closing basis. It's still support. You can see they've already tagged it right here, came close again, but that'll keep it still bullish. And then the key thing would be right here is the 990. If you break this on a closing basis, it would flip it bearish. Now, in order to assuredly put it bearish, you'd want to see two consecutive closes below that. You know, it'll probably get bearish with just the one, but sometimes you can always get a fake out and then flip right back and get everybody stuck on the wrong side of the boat, and then we flip right back. So two consecutive closes would definitely get us on the bearish side if we broke below 990. 2 consecutive daily closes. That would also be your support area. So you might see people, even if they were short, you might see people buying into as we come into this level. You could take that out, but as long as it would hold it, it would lose its short-term bullishness, but it would still be overall on a bull side. So there we go there. Let's take a look where we stand on the FX. We'll just try it on this screen. Probably switch it the next time. That way, if something's ever, I don't think anything is going to happen in indices right now, but the next time we'll probably flip it to a different screen. But for now, today, we'll just try it this way. But I do like having the single chart. Then I'm adjusting against everything else. And yet my other charts, when we get the pre-market open in some of these equities, something kind of, we get a big mover, I can immediately see that. But anyway, nonetheless, so here we are on the euro. We can shrink that up a little bit. This makes it so much easier with the single chart. So euro closed the week below 21.45, confluencing with 21.44, the 78%. The pair remains bullish but susceptible to a slide. Resistance will be 21.56 with support at 20.51. So I didn't really notice that. I forgot about that until I went to the weekly. That's why I really like this, using this program, because things are so much easier for me. I go back here, throw this on the weekly. It's all laid out. So you can see, remember, we had that as our resistance from 2 weeks prior, which was a 21.45, which is weekly. And then we had the 78%. I think Blake's 78% comes like in at 21.68 or something like that. But, 20 pips doesn't make too much of a difference. But I mean, I guess there could be some variation. I had 21.44, but remember, this is from 106.37 all the way to 25.54. So you're talking about more than 20 handles. But as long as we're staying below the 21.45, we're actually there right now. But once again, going with the analysis. So close the week below 21.45, confluence with the 21.44, the 78%, and 21.45 is that key level. The pair remains bullish, but susceptible to a slide. Resistance will be 21.56. Start the week. With support at 20.51. In case we do get that slide. Doesn't look like it for now. On to the cable. We know how important this 33.82 is. We're actually above it right now. Cable closed a week below 32.84, turning the pair short-term bearish. Initial support will be 31.90, followed by 31.13, with resistance at 33.20. Well, heck, we're way above that right now, because right now they kept the talks going, blah, blah, blah. So we do have to respect that, because it was a pretty good jump. Look, we came down here, we broke 32.48, which opened the floodgates to go lower, which we did. And then where do they find support? Once again, they're just trading level to level, 31.51. Now, like I told you, I usually like to keep my resistance where it is. Now, of course, it was done over the weekend, but they did open up, so they've extended those talks, so it kind of kept this thing on the bullish side. And plus, the move is more exaggerated, meaning from where we were looking at 33.20, we're already up, knock on the door at 34. So your immediate resistance right now is going to be that body right there. At least that's the way I'm going to look at it. So when you come here, that body is going to be right there, which is 34.04. And support, let's go to a 2-hour chart. That would be support right there, that body. 33.14 in the meantime. And you can see that kind of confluence is right here. Actually, let's go with this right here for a break. So right there, that will be 33.12. Let's go and go to the Aussie dollar. I was a bit surprised that this pushed up even higher, but don't forget they announced that bond buying program. That gave it the extra kick. So Aussie dollar closed at new highs on Thursday, resistance on Friday. And you can see here we closed at new highs, but look what we did on Friday. We established this gravestone doji. So I don't know why it said resistance on Friday, but it meant to say this gravestone doji. So resistance would be at 75.58 with support at 74.47. Paris Bureau Chief Sophie Pettis says, though, looks like it's encouraging. It's coming across a squawk of reaching a deal looks cautiously optimistic from the Paris Bureau Chief Sophie Pettis. I don't know who that is, but anyway, she's tweet says it looks encouraging. I mean, it's still just sitting here at 33.99. Anyway, just thought I'd share that. That's why I was just quiet listening with the saying on the squawk. Bear with me. Yeah, Sophie Petter. Oh, Live Squawk just retweeted it. Let's go into the Kiwi. Now, Kiwi posted a solid positive close on Thursday. You can see that here, followed by a tight range day on Friday. You see that here, which was what I was going to try and reference to when I was making the notes for the Aussie, but forgot to make those little notes. So, followed by a tight range on Friday. Appears the bears were stopped out of positions, meaning on Friday. Resistance will be 77.11 with support at 69.98. And 71.11. Oh, I got 71.48. Anyway, it's put 71.11. And go to the dollar CAD. Now, the dollar CAD broke to new lows this past week. Solid weekly support comes in at 27.35. You can see here, this is weekly support here, which will be the support to start the week with resistance at 28.20. So 27.35 is key weekly support and resistance. 28.20. Onto the peso. So dollar peso is attempting to make a stand at weekly support, which is 1988. Let me see right here. Make a stand at support weekly support 1988. Resistance will be 2026 with support at 2002 to start the week. 2026 with 2002. Oh wow, we're at the 2002 basically 2003. So 2002 and on to the dollar yen. So the dollar yen spent the past week in a 75 pip range, lacking momentum on either side. Resistance will be 452 with support at 375. Nothing happening in that pair. On to the dollar index. The dollar index fell back on Thursday. Support on Friday will be 90.18 with resistance at 91.26. So it got a pretty good wide range. Stays the same here. Let me see, because I think that was. That was for Friday. Yes, I don't know why the notes didn't update here. I didn't have it that low, but you can see here where we're at right now. So we'll have to just go with the lows right here. You see this low here? And that would be 90.61. Let's go with that. So those notes did not update. We'll see whether or not that holds or not, but that would be the resistance support and resistance. Looking at Friday's close here, and we would give it this body right here, which would be 91.11. I knew I was pushing for higher. I knew I was looking for 91.26 followed by 91.41. I remember. So we'll stay with the 91.26 down here, and let's go to the cross rates. So the Kiwi yen closed at a new weekly high above 73.20. Resistance to start the week will be 74.18 with support at 73.08. Onto the euro pound. And boy, look at that move last week. Holy smokes. Guess I saved that under default and didn't really want to do it that way, but it is what it is now. So the euro pound posted a mini shooting star, because usually the wick will even be much higher if it's a true shooting star. Resistance for the pair will be 91.94 with support at 90.93. And that was 91.94 on the resistance. Onto the euro odd. You can see we're holding that. Euro closed on weekly support of 60.65. Support will be 60.65 to start the week. A break would allow a test of 59.11. Resistance will be 61.44. 61.44. So 60.65 and 61. Let's double check that again. For the resistance, 61.14. And you can see right now they're just holding above this. There we go. That's on the weekly chart. Actually, that's daily, but that's a weekly chart. You can always pull it back here for actually looking at a weekly. Look at that. There we go. Let's go and move into the Euro Kiwi. Also on a weekly chart here, you can see that. So the Euro Kiwi last week gave up half of the prior week's gains. You can see that. The pair will be, support will be 70.06 with resistance at 71.57. Let's go and move into the Aussie yen. So the Aussie yen managed to close above 78.11, although the pair appears to be stretched. Resistance will be 78.81 with support at 77.68. So we did go and close up here, obviously a new weekly high, but Friday kind of saw a little bit of pullback stall, and you're seeing it right here on Monday. Just seems rather stretched to say the least. So you can see the resistance isn't even that much higher, 78.68, and we had 78.81, which I think was last week's high, and that's when it came up with that. I actually gave it just a hair bit more, 78.77, so I guess it came up with that 78.81. Let's go and move into the guppy. Let's see here. Guppy posted two strong losing days, finishing the week sub 3,800. Resistance to start the week will be 38.60 with support at 37.19. So it kind of stuck a little bit in no man's land here. And, the yen hasn't been moving that much. So obviously just a direct result of what's really happening here with the sterling. So once again, support is going to be 37.19 with resistance at 38.60. And finally, onto the sterling odd. You can see here we're looking on the weekly chart. So the sterling odd fell to weekly support of 74.85. You can see that. We'll kind of pull this in a little bit. See that more clearly. See that right there. So starting on fell weekly support 74.85 before posting a mild recovery. Support will remain 70.45 with resistance at 76.74. And that's going to do it here. And you can see here where we are right now with indices. No big deal here. I do like this free-flowing chart here because we'll just take a look where gold happens to be. I haven't really paid much attention to it. Okay, and so it's relatively quiet here with gold. Not a whole lot happening on this daily chart here at 1833. We saw that nice bounce, but we're just kind of like dead in the water here. So it looks to be about it. Thanks for joining us on the European crossover webinar, and we'll get the buy chart posted. And have a good start to the trading week. I don't think anything's going to come up until we get into the U.S. session. We do have the Electoral College today, so the market might be just kind of waiting on that. Then we also have the COVID stimulus talk, them trying to get that. So I think we'll be on hold until we get to the U.S. session. So definitely would wait until then. I don't see anything happening, but we'll see you in the chat room. Thanks for joining us.